Welcome to Matters Financial, Geopolitical from a Frontier. I apologise for my absence Monday and Tuesday. I had some guests from Palo Alto and I was pretty busy with them all day. My home thoughts are Nishat, my wife, and Aisha, my eldest daughter, are in London this week. Layla, Hannah, and myself are having to manage on our lonesome. It's quite a responsibility. And I'm having to tune into Nishat's times for traversing this city. It's really quite different. I'm reading another book by Vargas, Llosa, and I must say that The Feast of the Goat I thought was very, very powerful. Go back to one of my favourite quotes, and I didn't realise it was part of a bigger comment, so let me read you the quote you probably know is "Memory is a snare. Pure and simple, it alters, it subtly rearranges the past to fit the present." Twilight was coming on, the most mysterious and most beautiful hour of the day in Amazonia, as long as there isn't a cloudburst. If something matters greatly to you, you surround it with mystery, and that's precisely what moves me. The most important thing is not to be impatient and allow what must happen to happen. If a man lives calmly without getting impatient, he has time to think and to remember. That way he'll meet his destiny perhaps. He'll live content, maybe. He won't forget what he has learned. If he gets impatient, rushing to outstrip time, the world gets out of order, it seems, and the soul falls into a spiderweb of mud. That is confusion. The worst thing that can happen, let's say. Mistakes are always the result of confusion, it seems. It was World Rhino Day yesterday, and this is a photograph of two male rhinos that I took a while back at Llosa. Political reflections: fight or go shopping. China and America can't decide. It's been a long time since China and the US were as close as lips and teeth. When Chinese President Xi Jinping arrives in Washington, D.C. later this week, he will find barely disguised outrage over Beijing's suspected cyber attacks, its terraforming in the South China Sea, and the recent mass incarceration of human rights activists. For its part, China is utterly convinced that the US is pursuing a policy of containment. In a recent Harvard University study, former Australian Prime Minister and China scholar Kevin Rudd summarized Beijing's concerns in 5 bullet points: to isolate China, to contain it, diminish it, internally divide it, and sabotage its political leadership. I concluded by saying China does not look as impregnable as it did just a few months ago. I'll put up a photograph. The New York Times tweeted, "President of China arrives in the US. Xi Jinping, at a speech he had in Seattle, said there is no house of cards." When people are saying that, it normally means there is. And that took me back to a piece I wrote in December 2013 when I spoke about how the pivot to Asia was baring its fangs, and I said I see the pivot alongside Kevin Rudd, its interpretation of how the Chinese see it, as the encirclement of China, the shrinking of its operating theatre, and then lighting the tinderbox that is the periphery. And I said Xinjiang might well morph into China's Afghanistan. The development that I did not foresee in 2013, however, was the extent of the slowdown that we're seeing in China now, and the extent that the Chinese government failed to appreciate how to manage the stock market. Xi Jinping again, should they enter into conflict and confrontation, it would lead to disaster for both countries and the world at large. Holger tweeted, more doom data from China deepens slowdown concerns. Factory gauge drops to lowest since 2009. I spoke about this one in September when I said China must fix its economy despite its military show. And on the 24th of August this year, I was speaking about how China was roiling the markets. I quoted a senior IMF official, "It's totally premature to speak of a crisis in China," he said. I said, in my experience, when policymakers make these kinds of pronouncements, it is exactly because there is a crisis. I was talking then, this was in August, China's vast factory sector shrank at its fastest rate in almost 6.5 years in August. That speeded up. China's exports have collapsed to both Brazil and Russia. Russia's down 35.3%. At the moment, none of us can read China, said the CEO of Glencore. I said, I can, and this is going to get a lot worse. This is the real problem, I think, for the Chinese. No one believes the data anymore. And this moment when the market stops suspending its disbelief is seriously a dangerous one for policymakers. Zero H tweeted, China cakes in flash manufacturing PMI at lowest since March 2009. It came in at 47, expected was 47.5. The Chancellor of the Exchequer, George Osborne, ironically, was being given a tour of the Shanghai Stock Exchange on Tuesday during his 5-day visit to China. Let's move on to the currency markets. Euro 111.13. Dollar index has moved higher than in the early morning when it was at 96.28. Japanese yen 120.01. Swissy 0.9747. The pound 153.39. The Aussie is at 0.7039. India rupee 66. South Korean 111.87. The Rial at a record low 405.09. Egyptian pound 782.93. South African rand 1373.77. Dollar index, I'm putting up a 3-month chart. I'm sticking to my forecast of over 100 by year end. Euro dollar, I'll put up a 3-month chart as well. ECB is now talking the euro down on practically every day. The euro is down 1.4% this week. Holger tweeted, Volkswagen, an iconic German brand, down 20.1%. Dollar-denominated bonds blew out from 4.64% to 4.64% from 2.39%. So it's really a perfect storm for Volkswagen. Commodity markets, gold. Let me check where we're trading there. We're at 11.26. I still think that gold is going to be capped by 11.50. Crude oil, $46.24 when I had a look last. On the 3rd of November last year, I said that I thought the commodity supercycle is dead in the water. I still do. Citigroup is warning of bigger commodity losses looming. Let me put up a chart that Bloomberg Business tweeted of zinc, copper and coal. EU coal breaks the psychological barrier, $50 per ton. After this, there is a no man's land, was the quotation. Javier Blas, Glencore shares plunge about 10% to hit an all-time low of 107.7, down nearly 80% from the 2011 IPO. I like this tweet from Stin Ooms. Check out Andrei Melnichenko's $450 million super yacht, kitted out with the latest technology. Let's move on to emerging markets. Holger, again, Brazil real drops to lifetime low, and we've dropped even further. And then Bloomberg has got an article, Tummy Tucks Become Tourist Bargain on Brazil Currency Slump. From buttocks enhancement to wrinkle reduction, Brazilian cosmetic surgery is becoming a bargain for visitors as the real collapses against the dollar. I'm talking about somebody called Gomes, part of a growing number of medical tourists taking advantage of the bargains, a rare commercial bright spot in a country facing the worst recession in 9 decades, as well as a political crisis. A $500 skin treatment in Dallas runs only about $25 in Brazil, which is extraordinary. Let's move on to Africa. France 24 is now saying the deposed president is to return to office as Burkina coup leaders sign peace deal. A few hours before that, the coup leader said, "I'm not stalling for time. I'm within the time allotted to me. I'm still the president of the National Democratic Council," which is the junta. Loyalist troops said they were preparing to attack the Camp Naba coup military base near the capital's presidential palace, but it seems now that they've reached an accord. Then they put up a photograph that Al Jazeera News tweeted of the crisis, and you get a good idea of what it looks like in Ouagadougou. This was interesting. Sub-Saharan African consumer market of 900 million people who spend at least 20% of their earnings on food and beverages. It's an interesting nugget. Then moving on to looking at Angola, they are trying to manage it more of a glide path than a crash. Angola devalued the kwanza on September 10. The currency has dropped 24% this year, weakened to a record low on September the 21st. The nation's foreign reserves have dropped by 21% over the past year as the central bank sold dollars to defend the kwanza. I think if you look at the drop in government revenue, in particular in Angola, as a result of the drop in the oil price, one would anticipate at some stage an adjustment. They are trying to manage it in more of a glide path than a crash. And I said over the weekend, in Angola, President Eduardo dos Santos is leveraging the balance sheet, drawing down loans to make up the shortfall and stamping down hard on any whisper of dissent. But it's a very risky moment. South African all-share tumbled 1.74% yesterday, still up for the year 0.17%. JP Morgan, who keep in touch with me via email, bought the Rand at 13.67, targeting 16.30 and then 17.08. Let me put up a 6-month chart of the dollar rand for you to look at. Egyptian pound hanging in that 7.83, but the forwards indicating a big devaluation is on the horizon. Egyptian EGX30 down 17.7% this year, up 0.84% yesterday. I agree with this quote from De Ruyter on Bloomberg. I don't want to make any pronouncements on Nigerian monetary policy, but generally, if you look at the history of economics, currency pegs never work. They inevitably come apart, and when they come apart with some violence. I referred to this on January the 22nd. It is commendable that the Nigerians have managed to hold it at 200 until now, but surely it can't continue. But in January I was saying that Emefele's strategy was the finger in the dike strategy, and that it will be overwhelmed by a tsunami. President Buhari, I feel, has made the calculation that he needs to drain the trough as opposed to versus Angola, which is taking more and more loans on board. Probably not draining that trough. He is Mr. Forensic Audit and calculating that if the appointment of his cabinet can wait whilst he tries and staunches this hemorrhaging. Nigerian all shares down 12.208% year to date. Ghana Stock Exchange Composite Index down 9.81% year to date. My weekend article, I was speaking about African policymakers needing to be ahead of the curve in this new environment. I used the quote from Tom Burgess's The Looting Machine, a frozen moment when everyone sees what is on the end of every fork. And what I was referring to was this new price normal. Coming to Kenya, the Monetary Policy Committee retained the policy rate at 11.5%. And I said to the nation that this is what I expected. I said the US Federal Reserve, by not moving last week, has released some of the pressure from the cooker. Inflation is muted, domestic economy has slowed already, therefore I expect the MPC to wait and see, which they did. Tea farmers burned close to 10 billion shillings more from leaves delivered in the year ended June 2015, helped by a strong dollar high pricing of the commodity in the world market, tea shares have really outperformed this year at the stock exchange. Our performance this year has improved compared to last year, mainly because of the strong dollar and good market prices, says the Kenya Tea Development Authority Managing Director Lerionka Tiampati. Kenya has now introduced a system for buying tea bills, where people will be able to buy tea bills for as little as 3,000 shillings, which is $30. And this speaks to the revolution that we saw in the mobile money space with M-Pesa, the extension of that money transfer system into a loan, an ability to draw down loans, and now we have savings products coming through, and this really represents the democratization of the financial markets in a remarkable way. Telecom Kenya is targeting 1 billion shillings of sales from assets fire sale across the country, mostly real estate. Kenya shilling, last time I looked, 105.70. A key level is the 107. We can hold, the longer we can hold below that, the more bullish I will become, although I do think that the shilling is a buy, not a sell. Nairobi all shares down 9.577% year to date, edged up marginally yesterday, 0.01%. NSE 20 is down 17.613% year to date. If you need to check any share, there's a link on the bottom of Rich Wrap-Ups where you can look into any share. You're most welcome. I thank you for your support. I apologize for my absence.